Vietnam and Nigeria eye closer investment and trade ties. Moody's warns South Africa again about its growing government debt. Plus, Zimbabwe's inflation rises for a 10th straight month to 66.8% in March. Hello and welcome to Business Incorporated. I'm Chimezi Obi Iwawu. Let's get the show started now with the markets and major markets here in Africa, where mixed at intraday with the EGX 30 in Egypt down the most. Egypt's index was down 0.79%, while South Africa's index was down 0.33%. However, here in Nigeria, the NSE index was up 0.64% as earnings continue to trip in. Now, Kenya closed a positive on Monday. In the Middle East, Dubai stocks rose at intraday as real estate shares gained, while financial stocks lifted Saudi Arabia's index. In Dubai, the index was up 0.76% as blue chip developer Emma Properties gained 1.4% and Damak Properties climbed 3.1%. Saudi's index rose 0.65%, with ROG Bank adding 1.1%. Qatar's index was up 0.48%, while the Abu Dhabi index was up 0.45%, with the energy firm Dana Gas adding 2.9%. And in Europe, markets were slightly lower this morning amid ongoing concerns about a global economic downturn. And of course, a lot of other stories making the rounds from the European space. Let's talk to my colleague there now, Lars Holter. Hello, Lars. Good afternoon.
Hello, good afternoon.
So, economic data is making headlines today. Weakness in Germany, strength in China. What are investors making of the numbers?
Well, as you can see behind me on the chart here, the market has opted to go with the positive news, and that makes a lot of sense too if you look at the data. Of course, you have a weak data coming out of Germany, or to be precise, it's not even data, it's a forecast. It's an economic growth forecast from the German government, and it says that the German economy this year is going to grow by only 0.5% and not by a full percent as was previously forecast. Now, that is of course quite a difference, and it could be quite a disappointment for investors. But at the same time, we're getting the economic data from China, and GDP there in the first quarter has actually been a lot stronger than anticipated. And with China being an important market, not only for the companies there, but of course for European companies and for corporations the world over, that is really making an impact too, because a little bit of weakness in Germany is one side, a little bit more strength in China, of course, is quite a different story, and it makes investors slightly more optimistic today.
Now, for a few weeks now, Dutch bank ING has joined the merger talks already in place between Deutsche Bank and Commerzbank. Are things getting complicated even as Commerzbank share rose 3% today?
Yes, things are getting quite complicated. Of course, Commerzbank shares are up quite a bit today, more than 3%, as you said here. That is, of course, because investors can only be happy if there's two suitors for Commerzbank, because that can potentially drive up any prices here in case of a deal, a merger, a takeover. But it makes it mostly complicated for the German government. The German government, who holds 15% in Commerzbank, they see this not as a potential merger of banks. They see this as something that is of national importance, because the German government wants the country to have one big lender that can be a global champion as well. We don't have that in Germany right now, since over the last 10 years, of course, Deutsche Bank has lost quite a bit of its international standing due to the financial crisis and several scandals. So if the German government is interested to make a deal here between Deutsche Bank and Commerzbank, what they don't need is a suitor from abroad, like right now, yes, Dutch banking giant ING. And what makes it even more complicated is that ING is trying to make this really attractive for Germany by promising to move the company's headquarters from Amsterdam to Frankfurt, and by promising fewer layoffs than in case of a merger with Deutsche Bank. So this is really tricky right now, and yes, as said before, Commerzbank shares are rising because investors there are certainly in a good spot.
Still in corporate news, the EU is targeting Boeing in a new round of the U.S.-European trade war. What can you tell us about that?
That's actually funny. It's a typical Trump move here. Criticize people for things that you do yourself. Last week, if we want to look back a couple of days, last week Donald Trump announced punitive tariffs on the EU as punishment for subsidies the EU grants to the European airplane maker Airbus. Of course, this week now, the EU is hitting back. And they are saying they're going to put countermeasures on this, counter tariffs, to punish America for giving subsidies to their plane maker, of course, Boeing. Now, that makes a lot of sense, of course. Now the whole thing is going to the World Trade Organization, and they will have to sort it out. They will figure out how high the fines will be for each country, what kind of tariffs will be allowed and what not. The interesting thing here is the World Trade Organization has criticized in the past both the United States for paying subsidies to Boeing and the EU for paying subsidies to Airbus. So they don't like the whole thing in the first place, and now this is just coming up once again.
All right, thank you very much for your time, Lars. Enjoy the rest of the day. In Asia, stocks closed higher today following the release of better than expected economic numbers from China. Mainland China shares were higher on the day. The Shanghai Composite rose 0.29% to approximately 3,263.12, and the Shenzhen Composite rose 0.721% to close at around 1,772.71. Hong Kong's Hang Seng Index was largely flat as of its final hour of trading. Elsewhere in Asia, Japan's Nikkei 225 advanced 0.25% to close at 22,277.97, while the Topix Index also added 2.26% to finish its trading day at 1,630.68. Over in South Korea, however, the Kospi declined 0.12% to close at 2,245.89. The ASX 200 in Australia also fell 0.33% to end the trading day at 6,256.40, as almost all the sectors slipped.